Hello traders, and welcome to another video review. Today is Tuesday, November 29th, 2022. Let's find out what is going on the Forex calendar today. Let's find out what is going on the Forex calendar today. Plenty of data is waiting for the release. Some of them are even very important. However, overnight, data from Japan had been released in form of the job to applications ratio and retail sales. Retail sales particularly disappoints the market participants because the actual reading was 4.3%, while the forecast was 5%, which is supposed to beat the expectations of 4.8% released a month ago. So kind of a poor data from the Japan. We will definitely take a look at the Japanese yen chart later on. Plenty of speeches will be today waiting for the release. ECB, the Guidos will give a speech around 10 o'clock. Then Bank of England MPC member Kathleen Mann will give a speech. But we are waiting for the GDP data from the Canada, which are scheduled for release at 3:30, and of course we are waiting for the German CPI Consumer Price Index scheduled for release at 3 p.m. Another comments from the ECB Schreiber later on, and the key event of today released from the US at 5 o'clock in the afternoon, Consumer Confidence Index, which is expected to decrease from 102.5 points to 100 points. We have a speech from the Bank of England Governor Bailey at 5 o'clock, and at the end of the day, 11:30 p.m. we got API Weekly Crude Oil Stock data. So very interesting day. Everyone can find something for himself on the data front, so it should be a fun day to trade this kind of data release. We will definitely take a look on the Japanese yen and the Canadian dollar later on. So let's start with the US dollar to the Japanese yen. The daily time frame chart of the US dollar to the Japanese yen is showing us some sort of the bullish interest emerging from the lows of 137.47. This is the technical support level together with 137.08. So any breakout below this level will be definitely negative for the market participants, especially for bulls. We have a pin bar here as the wave C was formed, and now we got another pin bar when the yesterday's low was formed just above 137.47. so someone I mean bulls are defending this this level and don't want bears to break below. However, we might change our outlook. We might change our ABC to the downside scenario to more impulsive, because if we consider this as a wave 1, this as a wave 2, this move to the downside as the wave 3, wave 4, we are waiting for the wave 5 to the downside to appear shortly. Apparently this looks already as the wave 5 because the new low was made. However, this dynamic move to the downside it fits much more to the impulsive cycle than to the corrective cycle. So it looks like the correction on the US dollar to Japanese yen might be deeper than we expect. So that might be ABC, sorry, 1, 2, 3, 4, 5 wave A, ABC to the upside wave B, and then wave C to the downside. Let me just clear this for you guys. From the top to the bottom, that is not there. Wave A, then wave B, then wave C. Okay, so this is our plan. So instead of ABC here, we have changed the outlook to ABC, or we just changed the outlook and changed the cycle to 1 degree higher. All right, so this is how it looks like. Of course, we know there's an overbalance, so we don't need that measure anymore. And as you can see here, we got the bullish divergence, which means that we are very, very close to complete this recent move to the downside. We got lower lows made on the price, and we have the divergence here on the RSI. So it means that we are very, very close to complete this move to the downside, and that's typical behavior for making the low of the wave 5. So wave B bounce is coming, wave A is about to terminate, or it is already terminated on the US dollar to Japanese yen chart on the daily time frame chart. Daily time frame, of course. USD to the Canadian dollar. Let's find out what is going on there. And this looks much more like an ABC to the downside, as you can see here, right? There is a little bit more messy here. As the wave A develops, there is the wave B, that's the wave C, and now you have a wave overlaps, so it's pretty much sure ABC to the downside is completed at 1.3221. We got, of course, a bounce. Currently, the key level here from the upside, let me just grab some arrow here. The key level is, of course, 1.3494, because this market this level was a technical support once, then it was a resistance, and now it's a resistance as well. And it looks like the bears are making sure that no one will break this level. 1.3494, the second time this level was defended by bears, and the price is going again lower. So if we place some sort of or maybe we should try the parallel channel straight on. If we place a parallel channel here, you can see we don't need to extend it. There you go. We can see that this line here, why it's only one. Okay, let me just put it on the chart once more, something like that, and it should be like this. So as long as we trade inside of this channel below this trend line here, the outlook remains bearish. Okay, and the key level is, of course, 1.5494. The momentum is kind of a neutral, however it's skewed to the downside. So the US dollar to the Canadian dollar should penetrate the lower levels soon. So this is how it looks like on the US dollar to the Canadian dollar. There is one market we didn't check for quite some time. Let's check silver market. This is a daily time frame chart for silver. Let me just zoom out so you can see what we are dealing with on the silver market, and let me put the very important levels. That's the technical support, that's for sure. 1750.54. The other technical support is 1790.91. The old technical resistance has been seen here at 2140. However, this level has been violated already, and the next one was around 22.51. There is a trend line you can imagine here, and this trend line will be colored to orange. As you can see, you got the high here, you got the touch here, and then you got, of course, the extension to the upside, and this market was rejected. The higher levels was rejected on the level of, let's say, what was the high, 22.19. So it looks very good for another wave to the downside. As you can see on the spot silver market, we are consolidating around the technical support. Let me just place it on the chart. We have the support here, and of course the other support might be placed here. This is the newest data, so the level of 20.53 is counting as the technical support. The key level for now is, of course, the trend line breakout, possible trend line breakout level, and the technical resistance at 22.50. 51. As far as I'm concerned, we are moving up inside the channel. So what do we have here is like a kind of a channel like this, and the recent breakout higher was just above the upper channel line. As you can see, there is no dynamic to the upside yet, as the market lacks the momentum. The level of 50 had been violated, of course, because otherwise we wouldn't have the breakout to the upside. Right, so we are still trading above the level of 50 on the spot silver market. However, very close to the level of 53 points right now, so the momentum is not that strong. We are waiting for the breakout. Basically, if this price action is responsible for a potential breakout to the outside, please keep an eye on the level of 22.51. This is the level that that should be plays a vital. This is the level that should be violated in order for the market to rally higher, and it plays a vital role in the bearish plan to suppress the market rally higher above the trend line, and of course above 22.50. So keep an eye on this level, very important level to the upside. To the downside, the key level is, as I said, 20.53. So this is how the silver outlook looks like. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.